Managing money is important. However, even I admit, at times it is quite tedious and boring. That's why I'm a big fan of simplifying and automating as much as possible. Because when we can automate most of our finances, not only are we saving valuable time, it tends to work better because we're removing one of the biggest barriers to the wealth creation formula: us. So in the spirit of simplification and automation, in this video, I want to walk you through step by step how to set up your own ultimate money flow system. Hi, if you're new to the channel, my name is Tay from Financial Tortoise, where we learn to grow our wealth slow and steady. Just a quick caveat before we get started. Not all the steps that I'll review here will be relevant to everyone. We all have different employment and financial situations, so if you find a step irrelevant, feel free to skip ahead. Alright, with that said, let's get started. The first step to setting up your ultimate money flow system is to log into your employer's payroll system and enroll in the 401k match. For most companies, employers match employee contributions up to a percentage of annual income. For example, if you make $100,000 a year and your company matches up to 4% annually, when you contribute $4,000 into your 401k account, your company will automatically match with another $4,000. This is essentially free money, or a free raise, however you like to see it. If your company offers a 401k match and you haven't enrolled in it yet, stop this video right now and go ahead and do that. Another thing you might want to consider is automatic escalation if your company's 401k plan allows for that. What this will do is it will automatically increase your contribution every year without you having to do anything. Not only will this save time, but you will guarantee more savings in the long run. Step number 2 to setting up your ultimate money flow system is to enroll in your company's FSA, the Flexible Spending Account. This is of course if your company offers one. If you're not sure, check your company's HR benefits package you received when you were first hired, or just shoot your HR manager an email. A flexible spending account is an employer-sponsored healthcare benefit that allows employees to set aside money annually to cover the cost of qualified medical expenses. But the real benefit of this account is the tax savings. Once you set it up, a set amount is withdrawn from your paycheck every pay period automatically, lowering your overall taxable income. The money withdrawn accumulates in your FSA account, and when you have a medical expense, you simply withdraw from this account to pay for it. There is also a dependent care FSA, which works pretty much the same way as the healthcare FSA. Except it's for dependent care services such as preschool, after school, or summer day camp. One thing you have to be careful is that FSAs are typically use it or lose it type of plan. You have roughly 1 year to use the total sum contributed to the plan. So ideally, fund this account if you know you have upcoming healthcare or dependent care expenses. The third step to setting up your ultimate money flow system is to set up direct deposit of your paycheck into a single checking account. And for the most of you, you've likely already done this given we live in 21st century. If you're still receiving your paycheck by physical check, you want to correct this immediately. Consider your checking account as your primary base of operation. Pretty much all money will flow in and out of the single account. A couple of factors to consider when choosing your checking account. Understand fees and minimum. Most often, these go hand in hand. Many checking accounts waive fees as long as you maintain a certain minimum amount. If you aren't tied to a certain bank, consider finding a no-fee, no-minimum checking account. With the advent of online banking, there are so many to choose from nowadays. You can also talk to your current bank to see if they're willing to negotiate with you on this point. The fourth step to setting up your ultimate money flow system is to set up automated payments for all your essential overhead bills. If you're paying your bills via check or manually paying it every month by logging into your account, you want to correct this right away. Go through all your essential bills: rent, mortgage, insurance, and utility. All bills required to keep the light on and the toilet flushing. Then log into your respective portals and set up autopay. If you're concerned about overpaying or fraudulent charges, most institutions should enable notification whenever there are payments made. This way you're notified whenever an autopay goes through, either via text or an email. I have this set up so I get an email whenever my mortgage payment or my electric bill goes through. The fifth step to setting up your ultimate money flow system is to set up automated payments for all your credit cards. This is pretty much identical to the earlier point, but you want to do this with all your credit card bills. Again, if you're afraid of autopay because of errors or fraudulent charges, turn on notification. This feature is pretty basic with all credit cards, and you can even customize it with specific parameters. For example, I have it set up so I get an email whenever I have a transaction greater than $50 on any of my credit cards. This way, I can not only verify after a transaction goes through, but I'm also immediately in the loop if there's a fraudulent charge made. Alright, couple of things I want to share before moving on to the next steps. I haven't spoken much about debt so far, and there is good reason for that. It's because most of the steps that will come from this point on will only be relevant if you don't have any high interest debt. If you currently have high interest debt, I actually recommend you take whatever I'm going to talk about from here on out as more informational, not actionable. You want to make paying down your high interest debt your #1 priority before maximizing your investments. If you want some tips on just how to do that, please check out my video on debt snowball versus debt avalanche methods here. Alright, with that said, let's move on to step number 6. The number 6 step to setting up your ultimate money flow system is to set up automated contribution to a Roth IRA. In my personal opinion, Roth IRA is one of the best individual retirement accounts that I believe everyone should contribute to. Though you pay taxes upfront, it offers tax-free growth and tax-free withdrawals in your retirement. I say the more you can avoid paying taxes, the better it is. The Roth IRA contribution limit for 2023 is $6,500 for those under 50. So if you set up your account to contribute $540 from your checking account each month, you'll automatically hit the maximum by the year's end. I've seen too many people that say they'll contribute to their Roth IRA and they never get to it. And they said this 5 years ago. If we don't set up a system to pay ourselves first, something will always get in the way. Take yourself out of the formula by automating your Roth IRA contribution. The number 7 step to setting your ultimate money flow system is to set up automatic transfer to your savings accounts. And for this, you should have multiple savings accounts. One for each one of your different goals. Have a wedding coming up in 6 months? Set up a savings account. Want to save for a house down payment? Another savings account. How about that Europe trip for your 10-year anniversary? Don't disappoint your spouse. Set up that savings account. Once you have your individual savings account, set up automatic transfers right away. Even if it is only $10 a month, get in the habit early on. And also with timing, I recommend setting it up so it happens immediately after your payday. This way you have no opportunity to miss the money. The number 8 step to setting up your ultimate money flow system is to set up automatic contribution to your health savings account, also known as HSA. A health savings account is a tax-advantaged account created for individuals covered under high-deductible health plans, also known as HDHP, to save for qualified medical expenses. Other retirement accounts are taxed at some point, whether that's when the money goes into the account or when the money comes out. But HSAs have what most people like to call the triple tax benefit: tax-free contributions, tax-free growth, and tax-free distribution as long as funds are spent on qualified medical expenses. The HSA contribution limit for 2023 are $3,850 for self-only coverage and $7,750 for family coverage. So if you set up $645 automated monthly contribution, you'll hit the maximum for family coverage by the year end. Again, it all comes down to automation and not relying on us to do the right things. The more you can automate, the more you get used to it, and in the long run, have more money in your accounts. The number 9 step to setting up your ultimate money flow system is to set up an automatic contribution to your kids' 529 plans. A 529 plan is a tax-advantaged savings account designed to be used for your kids or your beneficiaries' education expenses. Though you don't get a tax deduction when you contribute, your earnings won't be taxed. And when you take the money out to pay for qualified education expenses, those withdrawals are tax-free as well. Think of it like a Roth IRA, but for education. 529 plans don't have an annual contribution limit. However, contributions to 529 plans are considered completed gifts for federal tax purposes. So in 2023, up to $17,000 per donor per beneficiary qualifies for the annual gift tax exclusion. If you can automate just even $100 a month when your kids are young, eventually compounding will take over as your kids get older. The number 10 step to setting up your ultimate money flow system is to set up automatic contribution to your brokerage account. If you max out all your tax advantage accounts, now you come to a point where you can open and contribute to a taxable brokerage account. If you're looking into early retirement, this account will help bridge the gap until you can tap into tax advantage accounts like 401k or Roth IRA. Like everything else we talked about so far, automate this contribution. Don't rely on your willpower to fund this account. Start out with a small amount like $50 a month and increase it gradually as your savings rate increases. You'll adjust and learn to live on less if your goals to save are crystal clear. And automation will help you get to your goals sooner. The number 11 step to setting up your ultimate money flow system is to set up an automatic contribution to paying down some of your low interest debt. I want to clarify here, I'm talking about low interest debt, not high interest debt like credit cards, student loans, or auto loans. Those should be tackled much earlier in the process. For many of us, this is likely our home mortgage. This is definitely a personal preference, but if you want to be completely debt-free sooner than later, automate additional contribution to your home mortgage. A simple strategy is to round up your mortgage payment. For example, let's say your monthly mortgage payment is $2,350. Round it up to $2,500, so you're paying an extra $150 towards your mortgage every month. And check to make sure this is going towards your principal, not interest. If you start early, you'll eventually get used to the extra payment, and before you know it, you will be mortgage-free. The number 12 step to setting up your ultimate money flow system is maintenance. After you set up your ultimate money flow system and automated everything, your money system will hum like a well-oiled machine. Every bill will get paid on time, your investment will get funded to the max, and before you know it, you'll be well on your way to financial independence. However, you can't be completely hands-off. Even the most well-oiled machines need occasional maintenance and adjustments, though minimal they may be. Set up a weekly, or in my case, a monthly time on your calendar to review your money system. If you have a systemized process for approaching this check-in, more efficient you will be. Here's how I like to approach it. I start out by going through all my bank and credit card transactions to see if there's anything that looks odd or unfamiliar. Then I check, are all my bills paid on time? Is autopay still on? Do I need to update my credit cards for any bills because of the expiration date? Then I move on to my investments. Are all the auto transfers going through as intended? Does any of the account information need to be updated? I glanced at my portfolio balance, but given I'm looking at this on a monthly basis, I try to ignore the monthly fluctuations. I'm Mr. Tortoise, so I have a decade-long horizon with my investments, not months. Then finally, I review my financial goals and assess if there are any adjustments I should make. Should I dial up my 529 contribution? Or maybe lower my savings transfer amount, given I'm pretty close to my goal? How about my 401k contribution? Am I on track to hit the max? If I can follow this approach and there's no major item I need to fix, I'm usually done with my process under an hour. Now, if all the things that I talked about so far is making your head spin because you feel you're nowhere near it, please don't worry. Getting our financial house in order is not an overnight event. It'll take months, if not years. Just being able to wrap our head around many of these financial accounts and terms will take time. But if you focus on steady and slow, increasing your financial knowledge one step at a time, I'm confident you'll get there. Thank you guys for watching. In the line of increasing your financial knowledge, if you'd like to learn more about some of my favorite personal finance books, please check out my video here. Until next time, all the best.